This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil. Going to give you a stock market update. I am going to go through the market conditions, and I do want to talk about something specific related to sentiment that you need to understand if you're going to use that type of an indicator. So that's number one. Number two, I am going to look at a few other indexes. There's something going on in the QQQ that I think, and it's a leadership area. I mean, it's been basically comprises the stocks that have been leading the march here. And I think there's a pretty important development taking place that we have to start watching very closely. Let's go ahead and get into this. Before we get going, let me just say, if you have an interest in learning some of these techniques in more in depth, that's multiple time frame analysis and understanding MACD and ADX in multiple time frames, I would suggest starting with the book. I'm offering it at a discount right now. You can go to rabilstockresearch.com/book for more information. Let's start out talking the market conditions and giving you an update there. And I want to take a minute and talk about sentiment. So as you guys know, I've used the Investors Intelligence Sentiment Survey for over 30 years. The guys at Investors Intelligence used to be clients of mine. And so what I want to tell you is that when it was originally created, they said it was basically to call market bottoms. It really wasn't used for tops as much as looking for, extremes to the downside and looking for when people were panicking. And so that's where the sentiment started. That's really where all these indicators, sentiment indicators, were really trying to identify lows. When they look at peaks in a move, what you'll notice about sentiment is that a lot of times it takes months to develop. It's not like the same. Panic is quick and the reversals can come very quick when it gets extreme, but you can get an extreme reading in the sentiment to the upside on the bullish side, and it could linger for a while. It can take months to develop. So I wanted to make sure I made that clear. I haven't said that before, but it does make sense when you think about it. We get panic type selling. Those don't typically last that long, and you can be a lot more aggressive at lows. When you're looking at tops, you gotta give it a little bit more time. Now, the reason why I do this and I call these market conditions is that these are absolutely conditions. They are not market signals. All right. There's a difference between a signal and a condition, right? We've got, this is clearly all of these are just the conditions of the market right now. Even these up here, these trend. And then what I do on Tuesdays are the actual signals. In most cases, I'm giving you specific criteria where you have a trigger point and what it actually takes to give a sell signal. This is just the underlying condition of the market right now. So I wanted to make sure that was clear. I think this is incredibly important to know where these stand. I mean, right now we've lost a couple, right? The sentiment is negative. The overbought, oversold is sitting at, it's actually at 88. It's close enough, 87. We're sitting in this, lingering in this overbought condition, which we've been in for almost the entire year. All right. Again, not necessarily a timing tool. So you have to accept that this is more of a condition in place and not a signal. Keep that in mind, and I think that'll help you a lot. All right. So we do have too much volatility right now on the daily chart, but it hasn't really changed on the weekly. We're still in pretty good shape on the weekly, and both the trend and the momentum on all three time frames are still in good shape. All right. Let's start looking at some of these. Look at the average true range moving average. This is an 18 MA of the average true range, which is a 20-period average true range. And you can see that it's still declining, and it's basically been declining since the beginning of 2023. We haven't had a shift in this line. It started to flatten here, but it never turned, and it never even flattened out. It was still considered declining throughout this whole phase. I mean, it's pretty clear we're somewhat overbought, but we're not getting the type of volatility that I would expect to see that you would kind of put in line with distribution taking place. So we haven't really seen that yet. So overall, I'm still feeling pretty good about the weekly, and I'll get into that when I get into the trend and momentum a little bit more in depth. Look at what's taking place on the daily, and if you just look at the bars of the weekly, and then look at the bars on the daily and look at what's going on. All these gaps, the size of the bar is growing. You see back in here, it was really smooth. The trend was smooth. There really weren't any gaps or anything like that. And now we're starting to see a lot more volatility, and it's really taken place since, sometime in February it started to kick in. So you can really see that in the average true range climbing here. Now it's making higher highs and higher lows. It has dropped down below the moving average, but if we just look at the moving average, basically starting in February, started to lift off and have pretty much been moving to the upside. So what that tells me is that we're a little bit more vulnerable on the weekly chart to breaking the 18 than we are on the weekly. So that's kind of my quick down and dirty interpretation. But let's start looking, and I want to go through, and I'm going to do it a little different this week. As I mentioned, I'm going to talk about a couple of other indexes. I want to start with the QQQ this week because we've got a very similar pattern to the SPY. This is showing a nice up move on the monthly. Overall conditions are pretty good. It's in an uptrend, and this is at a new high. We've had a nice run on the weekly chart, and it hasn't really tested the weekly moving average at all. The momentum is good enough to trend, both MACD and ADX. Since this essential reset, this was basically a reset back here in October, we're not showing any signs of divergence. We're hitting new highs with price. Now, recently, and I'm just going to zoom in on this for a second, just recently, as we've made new highs here, this is starting to die off a little bit. So we're not showing as much strength on the buyers, all right? But look at what the sellers are doing. They're also dropping off. We need strength in the sellers to top this thing out and even cause it to pull back towards the 18-week, which is essentially what I would be looking for here. But look at what's taken place on the daily chart. And I wanted to make sure what I talk about in terms of the volatility of the market and using the S&P, that is essentially what I created a course that I recently released, and I talk a lot about how to use that in your trading, how to look at the daily volatility and the weekly volatility, and essentially kind of create different categories of market conditions using and figuring out, what you should be doing at that point, what you should be favoring, where you should be going long, where you should have cash, whether you should have shorts on, stuff like that. All right, but when we look at it on an individual stock basis, we made a really strong move here to end the year on the QQQ, and look at the strength of the ADX. All right, and then we got a pullback. And then we made another new high, and we had really good strength here. Continued to move up. Now, just keep in mind, just because this is a lower peak than this, it doesn't mean that that does not concern me, right? That is not really that bothersome because it's well above the 25 line. This is the 25 line here. All right. And so what's interesting is what's taken place since that time. So we had another pullback, and then we went to a new high. And essentially starting in March, the ADX could not get above 25. Now MACD started diverging way back here. So if you use MACD divergence, I don't think it's quite as sensitive. You can use MACD divergence for little pullbacks, all right? And I think that'll help with that. But if you're looking for something a little bit more meaningful, like a reversal in the trend, this is what we got to key on, and that's this ADX signal. The fact that we have that is a condition. It's not a signal until we get confirmation on a price basis. And I'd actually like to see this trend line broken. All right, we're going to need to see this. It kind of came down to this line and is bouncing off of it. We're going to see this kind of need to knife down. The other way you could look at it is if we break this 18 and it rolls over. If that happens, then we'll be breaking the trend line as well. But that's what we want to look for in terms of confirmation. Now, why do I want to do that? Because this could play out one of two ways. This could be an exhaustion top, where it just gets so exhausted that it just kind of falls by its own weight and it breaks, and then we'd look for some kind of a lower high as a potential shorting opportunity down towards the 18-week. All right, now the other way it can play out is if we don't get that move to the downside and breaking the trend line, it could make one more surge to the upside and have a climax move. Now, this is where it gets a little bit dangerous when you're using ADX by itself. So you could get this looking like it's popping again. Green DI will go up and the blue line, the ADX line, will go up again. And this will have you thinking that it's the start of a new trend. But I would view it as more high probability that it would be some kind of a climax move. Now, it could be a really strong move, but it's something we have to be aware of because of the way this is playing out. It's going to be one of two ways, and I think we have to be on the lookout for it. By the way, if you're enjoying the content, hit that like button and also subscribe. I'm continuing to try and grow this channel, and I'd appreciate your support. Now, look at what's going on in the IWM. I mean, to me, this is really troubling. I mentioned this in my Stock Talk show yesterday, and that is we break out of this key level and look at the weekly bar. I mean, that is so disappointing. It's not really what I call follow through. That's an indecision bar. All right. So it's not really surprising to see this having not such a great day. The other thing that bugs me a little bit is that we've shown some strength to the upside and went to a new high, and the ADX couldn't get above 25. You see that? I mean, so we made a move here, and then look at the sloppy trading. You see how sloppy this is? ADX will not go up when it's sloppy. It just doesn't work like that. You have to have a lot of strength of the movement, and you can't have a lot of sloppy downside moves against you, or else ADX will not go up. So ADX is key in this situation because it talks about true strength. I think you're looking at true strength to the upside when it's going up with you. So this is not ideal in terms of the break, in terms of a breakout pattern. Not really what I'm looking for. I was kind of disappointed when I see that. So I wouldn't be surprised, just based on everything I'm seeing and the fact that this IWM was down almost 2% today, is that we get, some kind of a consolidation or pullback finally to take place in the general market. Now, it's going to be triggered by the QQQ. But I do want to tell you, I think the reason why, and I think a lot of this has to do with the Treasury. So here's the TNX. This is the 10-year, and you can see what's going on in the rates. We're getting this, a pretty big rally on the daily. You can see we got down to almost 4, and now we're up to about 430 almost on the rates. We're bouncing off the 18-month. I mean, it's not surprising. I've been talking about this with my subscribers. I think this is a consolidation, like a neutral pattern, but the volatility in this, the rallies and the declines are going to cause volatility in the market. So it's not really surprising to be seeing what's taking place in the market overall. All right, let's look at this spider. It's nothing new. All right, there's not a lot new going on. We still got this move to the upside. We're a good 1, 2, 3, 4, 5 months into this move. All right. And I do like to think think sort of 3 to 5 bars and look for a pullback. Right. And if it doesn't pull back here, then it could go up 8 bars before it reverses. So it's kind of key to see how this reacts on this bar. If this is a topping bar, 3 to 5 are kind of the time frame I like to look for. Once we get beyond that, it's almost like it's too strong and it could have a little bit of a pop. So it's just something else to keep in mind. All right, so we've got that. We've got a pretty good trend in place I think this trend is actually much stronger than what's going on in the QQQ. You see how big a move this is making? This is actually making a new high. Now, in the near term, we are getting a little bit of a drop off in the buyers, but look at how weak the sellers are. Now, I mentioned this before, but you see how this is down to 8? And whenever you can go back and look, when this gets this low, you got to start thinking that we're probably getting close to some type of selling taking place. But it hasn't happened yet. Wait for an uptick on that. And it'll really start with an uptick in the red DI. I mean, red DI will probably make a pop, and this will come down. These will crisscross or something like that. This is not a great day for the spider, but it actually closed off of its low. I mean, you see how this is coming back up? It's just an unlimited amount of buyers underneath. It's amazing. All right. But the problem is in the true real buying strength isn't there. It's enough strength to maybe keep it going, but it doesn't look that crazy strong. And we have shown signs of divergence, but it isn't the kind of divergence that I would be looking for like as a short play, like I'm talking about with the QQQ. But what bothers me is if the QQQ gets hit, I think this is going to have an impact on the spider. I think it'll have an impact on the IWM. I think the general market will have more pressure on it if that takes place. And I'm saying if because I'm not, I've been saying this for weeks now. Until we break this 18 and cause the 18 to roll over, you can't get bearish on this market. And even when that happens, I wouldn't get bearish because I think we're just talking about a correction back down to the 18-week. So that's kind of where I am right now. We've been spinning around here. It's not really making a lot of upside progress here the last 2 or 3 weeks, but it's also not breaking down. We're going to need some sellers for that to happen. That's what we're going to be on the lookout for. Have a great week, and we'll see you next time.